What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your daily stock market update. We did start our short-term bounce today, but we still have a lot of volatility in this market. There's still a lot of earnings coming out this week, and there's still a lot of volatility that we have going into this election, so we have a lot to talk about tonight. Before we get into the charts, I have a special request from all of you. Please go smash that like button right now. And if you're new, go ahead and subscribe to the channel so you can follow along with all of my daily updates. Let's try to break 500 likes on this video, and I'm gonna try to do my best to educate you tonight and help you through these volatile times. So help me out by smashing that like button. First up, we're gonna take a look at the SP 500 SPY ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. So on the SPY ETF, we did start our short-term bounce today, and we see the SPY ETF going up 1.02%. Now if we switch over to a 1 hour chart, we can see that we started attacking this gap above, and this will be a resistance area for the bears, and it's going to be a struggle for the bulls to blast through this gap. So the gap did get squeezed up a little bit, but this gap still has a low of $333, and the gap won't close until we get all the way up to $338. Remember, we like to follow gaps on this channel because gaps typically get filled on ETFs like SPY. So we want to be very aware of this gap, and this gap is going to be equally important for the bulls and the bears. For this gap, this area is a level that could be resistance, and bears could actually short going into this gap. But for the bulls, since we know that gaps typically get filled, this is also a price target level for us. So as a bull, if you're trying to trade right now, you could have price targets at the gap at 333 and at the gap closure at 338. So you could use these gaps to enter a swing trade knowing that you're going to be holding that position for a couple of weeks or longer, but you know your price targets because you know that that gap is likely going to get filled. It's very likely that even if this gap is going to be a resistance level for the bears to short, it's still a possibility that that gap is going to close completely before the bears can drive this market lower. So if you're looking at this 1 hour chart, don't forget about our resistance trend line, which is calling the top on this downtrend. And you can see that that gap and that resistance trend line coincide right at $338 by a date of November 3rd. So if you are into swing trading the stock market, you could assume that if you're buying at these levels, you're looking for a gap closure and a test of resistance right around November 3rd, and that could be your take profit area. So this is how you can use volatility to your advantage when we get these huge gaps that open up, and we know that these gaps are likely to get filled. They can actually change your trade plan, and you can make a trade plan around gap closures. So I hope that makes sense, and I hope that helps some of you that are looking at opportunities on how to trade this market. So one other thing I want to mention is, if you do remember in last night's video, I said that we got a buy order on the Stocks Channel Discord, and if you do want to follow the trades that the Stocks Channel is making, all you need to do is look in the description and become a tier 2 or tier 3 member, and you will instantly get Discord access. So one thing to note about a trade like yesterday where we had a huge bearish day closing down over -3% is those are actually some of the best days to buy. If you think about buying on yesterday when we had this huge red candle, there's no way that that feels good. It's one of those days where you just want to puke on your shoes, and the fact that you don't want to buy actually means that it's one of the best buying opportunities that you could have. Just remember, like Warren Buffett says, is you want to buy when there's blood in the streets and everybody is fearful. When everybody is fearful and everybody's selling and running for the door, that could be the best buying opportunity for you, and you could get a very quick trade. So you could see if you bought yesterday, you had plenty of opportunities to sell today, any point in the day, intraday, to sell for a large gain. Now, where you take your profits is going to vary person by person. Some people like to hold their positions and try to maximize the gain, and other people like to scalp for a quick day trade. It doesn't matter however you're making profits. The point is profits are profits, and when we get these huge sell-offs, that's a great opportunity to take advantage of volatility and try to make some quick money. So if you're going to buy and you feel good about it, you might want to second guess yourself unless you're typically a high percentage winning trader. If you're typically losing your trades and you feel good about every trade you make, it may be time to start making some of those trades that don't feel so good, and you start changing up your strategy a little bit. So buying yesterday absolutely didn't feel good, but if you bought yesterday, you felt really good today. Remember, we were way below the lower Bollinger Band, and it's typical to get a retracement back into the Bollinger Band once we get that far stretched. Another thing to note is we have the Fibonacci retracements from the entire bull run since the crash of March, and you can see that we were also trading right around the 0.236 Fibonacci retracement level at $325. So you could say yesterday we were way below the Bollinger Band, and we were near a very critical Fibonacci retracement level, and it is a lot of blood in the streets yesterday. So right here on the stocks channel, we see that as a buying opportunity, and obviously that paid off today because we had a nice rally. Now don't forget, we are still in an extremely bearish trend, and you can see that this 5 EMA is essentially going down in a straight line like it looks like a waterfall. The 5 EMA is crossed well below the 50 EMA, and the price action is bearish because we're closing below the 50 EMA as well. So this is a bearish trend, and that's why we don't want to hold these positions for very long. We want to get in, we want to get our profits, and we want to get right back out, because it's likely that we're going to get an opportunity to get right back in. That's the beauty of trading volatility, is we're getting opportunities almost every other day at this point, and that's a great opportunity as a trader to make a lot of money. So right now on the SPY ETF, you want to watch this resistance trend line, and you want to pay attention to this gap, which is going to close at a price target of 338, and the lower part of that gap is around $333. So with today's close right around 330, that's still a $3 upside, and there could be potential to continue trading down at these levels. Now, if you're watching SPY closely, don't forget our support level down here at 321 is going to be a very critical support level, because if we do get a close below 321, that will be a lower low on the daily chart. Right now, we still have the benefit of having higher lows, and as long as we have higher lows, we could still be in somewhat of a consolidation pattern. We do have a lower high, but we also have higher lows. So if we draw that out just roughly here, you can see that that starts leading into somewhat of a wedging shape, and the price action is still sort of consolidating within these lower highs and higher lows. So we're still in somewhat of a consolidation, and we know consolidations could break to the downside or the upside. So we just want to take an opportunity to trade while we're in these levels, and we don't want to guess which direction the stock market's going to go. Remember, on the stocks channel, the trend is our friend, and right now we have a short-term bearish trend and a medium-term bearish trend. The short-term bearish trend is defined by the 5 EMA below the 13, and the medium-term bearish trend is defined by the negative sloping 20 simple moving average. So it's hard to go full bull on this market right now, and if you're going long on a trade position, you want to take your profits quickly and don't get greedy. There's still a lot of earnings that can go negative, and we could see swings in either direction. Volatility doesn't take sides. We could see huge upswings or huge downswings. As a trader, we're looking to buy off support levels, because I don't recommend trying to short this market right now, because we've already dropped so much. You could actually lose more money trying to short this market than you could trying to go long. Remember, the market is biased to the long position, and the market typically goes up more than it goes down. So if you're a trader, you're already biased to the upside, so you want to look for opportunities to buy off of support levels, and you're more likely going to be a more successful trader. So on SPY, don't forget we do have that gap closed at 331, and that is holding up as a resistance level, because you can see intraday we were above that resistance, but we did close below it. So as far as resistance levels go, watch this $331 level. Go ahead and draw in this resistance trend line and this gap, and that gap will change based off of where we're at in this resistance line. Every day that goes by, the resistance line obviously has a lower price target. So the bottom of that gap is 333, and the top of that gap is 338. So watch those levels closely. And also for the next support levels, we do have the 0.236 Fibonacci retracement at 325. And if we break below that, our next level of support, which is a very critical support level, is $321. Next up is the Nasdaq 100 QQQ ETF, and this is the buy trigger we got on the stocks channel yesterday at a price target of $271. So we had a great day today, and we did take our profits today because we're in that bearish trend and we don't want to get greedy. So going over to a 1 hour chart, you can see that we did start getting up into this gap above. So we'll move this gap up, and we see that this gap is now shrinking. So the bottom of this gap is now a price target of 279, and we did close all the way down at 276. So we see in the last 2 hours of the trading day, we did see some volatility and some selling, and that's why we could still see trading opportunities that we could take going up into this gap to the upside. So zooming out, you can see we also have this resistance trend line on the triple Qs, and that resistance trend line and that gap actually coincide at a price target of $279 by a date of tomorrow, which is October 30th. If we can break above resistance, it's likely we're going to close this top of the gap at $281. So right now, if you are trading ETFs, I do suggest trading technology sector, because technology is typically the stronger sector in this climate right now that we're in. So looking at the triple Qs ETF, we see that we are in a gap position where we could close that gap and break out of resistance right around the 279 up to the 281 level. So those are great price targets to the upside on the triple Qs ETF. And going back to a daily chart, you can see that we still have that bearish trend because the 5 EMA is still trading below the 13. We also have the bearish price action because we're still closing below the 50 EMA. The 20 simple moving average is relatively flat, so we'll call the medium term trend neutral right now, but you can see that we are getting bearish price action closes and we still have that short term bearish trend. So we don't want to get greedy on our trades and we want to take our profits quickly. Now, as far as support levels go on the QQQ ETF, we also drew in the Fibonacci retracement level of 0.236 at $270. And we have the previous support level, which was the previous gap closure at $272. Now, if we go to critical support levels, it would be our previous low down here at $260. So if we start closing below 272 and 270, our critical support level on the QQQ's ETF is going to be $261. And if we start closing below there, the bears are definitely going to start taking over this market and we could see much lower prices. So take advantage of this volatility and watch these support levels very closely. And don't forget about the gap above because that's a great price target if you're trying to swing trade right now. Remember, this chart starts turning bullish if we can get price action closes back above the 50 EMA and if we can get that 5 EMA to cross back above the 13 EMA. That'll snap the short-term bear trend and we could begin to get bullish on this market once we start seeing that reversal. Next up, let's go ahead and take a look at the Dow Jones Industrial DIA ETF, and we see the Dow Jones came all the way down to our gap at 264 and did close that gap today. So we see that that level was going to be a critical support level at 264, and that level did hold up as support today because we closed up higher right around 266. The 0.236 Fibonacci retracement level on the Dow Jones is 266, and we closed right on that level today. So the Dow Jones is already near very critical support levels, because you can see the Dow Jones already did form a lower low. The Dow Jones has also been forming lower highs. So the Dow Jones is by far the most bearish of the three indices. So if you're trading anything right now, I would probably stick with technology because the Dow Jones, while it does have more upside potential, it also has more downside risk. So we won't spend too much time on the Dow, but we do have the gap above at 272 and that gap will close at 273. Don't forget on the Dow, we're still trading well below the lower Bollinger Band, so there still is a possibility that we get a retracement to the upside and then maybe we could continue to the downside. So the Dow Jones still does have a lot of risk, but it also does have a lot of reward if you're willing to take on that risk. So next up is the VIX, which is our fear indicator, and remember this market is volatile because the VIX is elevated. The VIX did go down over 6% today, but the VIX is still trading in the high 30s where we could still see negative 3 and 4% swings. Obviously that could go in the up direction as well, so we don't want to get too bearish just because the VIX is at an elevated rate. Now the VIX did break out of our resistance trend line and we do have support on the VIX at 34.6. So right now, just know that volatility is in this market and it looks like it's here to stay. So adjust your trading strategies accordingly and don't get overly greedy with your trade positions. Try to get in and out quickly and take advantage of this volatility while it's here. You really don't want to get too bullish or too bearish in a volatile market. You want to take what the market gives you, trade with what's in front of you, and take your profits while you can. You can see that the VIX is in a very bullish trend. As you can tell from these moving averages, they're all stacked to the bull side. So it looks like volatility is here to stay, and it's likely that we could see more volatility as well. So manage your risk very well, and you don't want to be taking on a lot of risk right now. You're better off managing your risk and getting in and out of positions quickly. Know your entries and know your exits, and make sure if you're going to make a trade that you fully understand where your entry and exit points are. Next up is Apple stock, which is our market moving stock, and we see Apple going right up to its previous support trend line, which is now a resistance trend line because we did close below it. So Apple did have earnings after the bell, and post market Apple is down almost negative 6%. So there's going to be a lot of volatility tomorrow because remember, there's a lot of earnings going on. So if Apple is going to go back into this bearish market that it's in because that 5 EMA is trading below the 13, we know we're in a short-term bear trend. Remember, the price target on Apple to the downside is the gap close at $96. So right now we're bearish on Apple and we don't want to get bullish on Apple until we see what's going to happen after earnings. It looks like Apple's going to continue trending down and it looks like we're looking for Apple to close the gap at $96. So we're going to leave it there for now and we'll come back in and check on it tomorrow. Next up is Tesla, and we see Tesla still kind of trading down in a small short-term bear trend, and it's still trading above its 50 EMA, which is bullish price action. We have bearish trending but bullish price action, and as long as Tesla can remain above the 50 EMA, Tesla's still in good shape. So right now, look for Tesla to hold up above $404, and if we don't get a close below 50, Tesla bulls are not in trouble just yet. Now, if Tesla does close below the 50 EMA, we'll have bearish price action and bearish trending, and I would think that the Tesla bears are going to come in and start shorting Tesla heavily. So right now, if we do get a close below 50 EMA and you're a Tesla bull, you're looking to buy off next possible support levels at the 0.618 Fibonacci retracement level at 395. And if we close below that, we could go all the way back down to $362 and test our previous support level. Next up is the US dollar, and this is the DXY we're looking at. And we see the US dollar looking actually pretty bullish today, closing back above and forming a new higher high on the daily chart. You can see the trend is going bullish because the 5 EMA is starting to trade and break above the 13 and the 20. The price action closes bullish as well, so if the 5 EMA can keep trending up and close above the 50, the dollar could be going back into a bull market. Remember, a strong dollar is typically meaning a weaker stock market. So if the dollar continues to get stronger and go into a bull market, we could see the stock market continue to weaken. So let's watch the dollar, and if it keeps trending up, we need to get more defensive and we need to start preparing for more correction in stocks. Next up is gold, and we see gold did break to the downside as we covered in last night's video, and it is holding up above support level at 1860. So this could be an opportunity to start scaling into gold because it does look like it's holding up above support. So if gold can hold up above support at 1860, this could be a buying opportunity and we could start rallying from this level, and we would obviously want to set our stop loss below support. So gold's looking good and it looks like it is holding up above support, and it does look like gold can start rallying soon. Next up is Bitcoin, and remember, Bitcoin did hit our price target at 13,800, and we do expect Bitcoin to start cooling off and consolidating before heading higher. So we still see really good volume, which is great for the Bitcoin bulls, and we still see a lot of people stepping in and buying Bitcoin. So I am still expecting to see Bitcoin break right through this resistance level, but I think we need some time to consolidate and build up some time for the bulls and become less overbought, build up some energy, and then I think we'll blast right through this resistance. So let's be patient on Bitcoin, and if you've been waiting to get in, start looking for opportunities to buy off support. It looks like Bitcoin keeps coming down to the low 13,000s and high 12,000s, and that could be an opportunity to start scaling into Bitcoin. But remember, Bitcoin is a long-term hold right now, and we're expecting the Bitcoin bull market to really get started next year. So I don't really suggest getting into Bitcoin as a trader. It's just one of those things you probably want to start accumulating and get ready for the next bull run, because if you follow cryptocurrency, it could go parabolic and we could see crazy price swings in the future. So let's take a quick look at the sectors driving the market to get a better idea if the S&P 500 is going to go higher or lower. And the first one is financials. So we see financials are still in that bearish trend and we're still getting bearish price action. So we need to watch to see if the financials are going to hold up and not form that lower low on the daily chart. So right now financials are still looking bearish, and it looks like the bulls have a lot of work to do to fix this chart and turn it back to bullish. The first step for the bulls is just make sure we stay up above this $23 level. Next up is industrials, and we see the industrial bulls doing everything they needed to do today to save this chart because we did get a bounce off of this critical support level. Remember, we don't want to see lower lows if we're going to be bullish on this market. If we do get a close below support at $74, we're likely going to close this gap at 72 on the industrials. But right now the bulls stepped in and we did get a bounce off support. Still looking bearish though. We have the bearish trend and the bearish price action, and this chart has a lot of work to do to start looking bullish again. Next up is healthcare, and we see healthcare testing our support level, which is very critical support level intraday, and bouncing and closing higher. That's still not convincing enough though, and we still have a strong bearish trend. So financials, industrials, and healthcare are looking bearish, and that's not making us very bullish on the S&P 500 right now. So to summarize all of this, let's go back to the S&P 500, and we saw that all of the sectors are still bearish, and we still have bearish trending and bearish price action. So right now we don't want to become too bullish on the S&P 500, and you can see we're still in a very strong downtrend. The trend is our friend, and we want to follow the trend. That doesn't necessarily mean that we want to short the market, but we don't want to go long, and we don't want to be in a long-term hold position right now until we start to see this chart look bullish. So right now we're taking this opportunity and this volatility to become traders, and we're doing a lot more trading while we have the opportunity in these huge price swings. So if you're interested in the trades, don't forget you can become a member in the description below, and you will get access to the Discord server where the trades are happening. Also, please remember, if you haven't already, to smash that like button to help me out. I really hope these videos are helping you out and helping you navigate this volatile market. Also, if you're new to the channel, go ahead and hit that subscribe button so you can follow along with all of my daily updates. Good luck out there, everybody. Thanks for watching, and as always, I will see you in the next episode.